welcome to your deep dive. Today, we're going to be tackling cryptocurrency. We're using excerpts from the book, How to Make Your First Million with Cryptocurrency,
Very cool.
as our guide.
Looking forward to it.
Yeah, this book starts with a story about a father and son on vacation,
Yeah.
and the son is making a killing trading crypto.
Uh-huh.
And this kind of sparks the dad's interest.
Yeah.
And it almost seems to suggest that anyone can get involved in this.
Yeah.
You don't need to be some kind of Wall Street whiz to get into crypto.
And what's interesting is the book emphasizes the timing of Bitcoin's creation. It wasn't just some random tech innovation.
Yeah.
It was a direct response to the 2008 financial crisis.
Right.
You remember those crazy few months, Bank of America buying Merrill Lynch, Lehman Brothers collapsing, TARP being signed into law?
Oh, yeah.
Right in the thick of it? On October 31st, the Bitcoin white paper was published.
Wow.
It was almost like...
So it wasn't just about, making money. It was about creating a whole new system.
Exactly. The Lehman Brothers collapse wasn't just a financial disaster. It was a crisis of trust.
Yeah.
People lost faith in the centralized systems that were supposed to be protecting their money.
Right.
Bitcoin emerged from that climate, offering a decentralized system where no single entity held the power.
Okay, so let's define cryptocurrency in a way that makes sense for those of us who are not coding wizards.
Sure.
The book talks about the blockchain.
Right.
What does that actually mean?
Simply put, it's a shared database,
Okay.
but with some unique properties. Imagine a digital ledger that's spread across thousands of computers worldwide.
Okay.
No single person or institution controls it. That's what we mean by decentralized. And because it's distributed, it's incredibly secure and transparent.
So unlike my bank where I have to trust them with my money, this is more like everyone's watching everyone else.
Precisely. Every transaction is recorded on the blockchain, visible to everyone.
Wow.
It removes the need for that blind trust we've placed in traditional institutions.
I like that. The book also tackles this myth that you need a fortune to get started.
Uh-huh.
They talk about how Bitcoin is divisible down to 8 decimal places.
Right. You don't need to buy a whole Bitcoin.
Right.
You can start smaller.
Yeah.
Invest what you're comfortable with.
Okay.
And build your portfolio over time.
Speaking of building a portfolio, the book briefly mentions altcoins.
Yeah.
Is that just a fancy word for any cryptocurrency that's not Bitcoin?
Essentially, yes. While Bitcoin is the king,
Huh?
there's Ethereum with smart contracts, which opens up a whole new world of possibilities, from decentralized finance to NFTs. Then you have Litecoin, which focuses on faster transaction speeds and lower fees. Each altcoin has its own unique features and goals.
So how do you decide which altcoins are worth investing in?
Well, the book recommends looking at a few key factors. First, scarcity.
Okay.
A limited supply can drive up demand.
Right.
Then there's disruptive potential. Does it solve a real-world problem in an innovative way? Will people actually use it? And just as important, look at the team behind it. Are they credible and experienced?
Right, so it's got to have utility.
Absolutely.
Okay, that makes sense.
Yeah.
But with so many altcoins popping up, it must be hard to separate the wheat from the chaff.
Absolutely. Many altcoins are highly speculative.
Yeah.
Thorough research is essential before investing.
So do your homework.
Yes.
Okay, let's get down to brass tacks.
Yeah.
Beyond the hype, what are the solid reasons to consider cryptocurrency as an investment?
Well, there's the potential for high returns. Look at the historical price growth of Bitcoin, Ethereum, Litecoin.
Yeah.
It's been significant.
Yeah.
But of course, we have to acknowledge the inherent volatility.
Right.
Crypto is a high-risk, high-reward game.
You mentioned volatility. Isn't that a double-edged sword? How can listeners mitigate the risk of significant losses?
That's a great question. The book talks a lot about responsible investing and having a solid strategy, which we'll delve into later.
Right.
But one key aspect is diversification.
Right.
Not putting all your eggs in one basket.
Don't put all your eggs in one basket.
We'll discuss that in more detail soon.
That makes sense.
Oh.
So beyond the potential for profit,
Yeah.
what are some other compelling arguments for crypto?
Many people see crypto as a hedge against inflation, especially with current monetary policies.
Right.
If you're worried about your savings losing value over time,
Yeah.
crypto can be an attractive option.
That resonates with a lot of people who are disillusioned with the traditional financial system.
Right. And let's not forget the privacy and security benefits.
Yeah.
Crypto transactions are highly secure thanks to cryptography, offering more privacy than traditional methods.
Yeah.
It gives individuals more control over their finances,
Right.
free from the oversight of banks and governments.
I think that sense of freedom and control is a big part of crypto's appeal.
Absolutely. It's about empowering individuals
Yeah.
to take control of their financial destinies.
Now, I know a lot of people think they need a lot of money to get into crypto,
Right.
but this book challenges that notion.
Yeah.
They offer some creative ways to fund your crypto journey right.
Yes, they use some great examples. Instead of thinking about how much money you don't have,
Right.
look around for things you could sell.
Yeah.
The book mentions one person selling tools he no longer needed.
Yeah.
Another selling his TV and Xbox.
Oh.
It's about looking at your belongings with fresh eyes.
Yeah.
Could any of it be turned into crypto capital?
Yeah, like, could I sell this microphone right now and buy some Bitcoin?
Exactly.
They also talk about garbage accounts.
Yes.
Those forgotten bits of money in old pension funds or unused brokerage accounts. It's amazing how those small amounts can add up.
They really can.
And then there are things like tax refunds or unexpected income.
Right.
Instead of letting that money disappear, you could direct it towards your crypto goals.
Exactly.
It's about making conscious choices with your money.
It is.
But they caution against going into debt to fund investments, right things.
Absolutely.
Yeah.
Using credit cards or home equity loans is extremely risky.
Okay.
It's crucial to invest responsibly and only use money you can afford to lose. That's a fundamental principle we'll come back to again and again.
Don't invest what you can't afford to lose.
Right.
So you've got some capital, you're ready to dip your toes into the crypto waters.
Yeah.
What's next? How do you actually decide what to invest in?
The book dives into two main approaches:
Okay.
fundamental and technical analysis. Think of it like two lenses for viewing the market.
Okay. Break those down for me. What's the difference?
Fundamental analysis is like looking under the hood of a car. You're assessing the underlying value of an asset.
Okay.
In crypto, that means looking at the technology, the team, the potential for adoption. Is this a project with real staying power?
So it's about the long-term potential,
Mm-hmm.
not just short-term price fluctuations.
Exactly. Technical analysis, on the other hand, is more about reading the charts, looking for patterns and trends that can signal buying or selling opportunities.
So it's more about timing the market.
Yes, using historical price data to try and predict future movements. The book actually recommends combining both approaches. It's about getting a holistic view of the market.
That makes sense. It's
Yeah.
like having a roadmap and a compass. You need both to navigate effectively.
Precisely. It's not about blindly jumping in. It's about creating a thoughtful strategy.
And that seems to be a recurring theme in the book.
Mm-hmm.
Taking a deliberate approach, not just chasing quick riches.
Right. They lay out a step-by-step process for creating your own crypto system. It starts with setting clear goals.
Yeah.
What are you hoping to achieve? Then you define your risk capital, the amount you're comfortable losing without impacting your life.
While decentralization is a core tenet of crypto, some argue that increased regulation is necessary to protect investors and prevent illicit activities. What are your thoughts on this tension?
That's a key debate right now,
Yeah.
and there are valid arguments on both sides. On one hand, regulation could bring more stability and legitimacy to the market, attracting institutional investors and potentially leading to wider adoption. On the other hand, excessive regulation could stifle innovation and undermine the very principles of decentralization that make crypto so appealing.
So it's a delicate balancing act.
Absolutely.
Yeah.
And the outcome of this debate will likely shape the future of the crypto landscape.
It sounds like we've only just scratched the surface here.
We have a lot more to uncover, so stay tuned for part 2 of our deep dive, where we'll unpack how to actually set up your accounts and start trading.
I can't wait.
Yeah, me too.
Awesome.
All right.
Okay.
Sounds good. All right, so last time we laid the groundwork,
Yeah.
exploring the origins of crypto and some of the reasons why it's so compelling.
Right.
But now let's dive into the practical side.
Okay.
You've got some capital, you're ready to take the plunge.
Yep.
How do you actually get started?
Yeah, that's the million-dollar question, right?
Right.
So this book walks us through setting up accounts on exchanges like Coinbase, Bittrex, and Binance.
Mm-hmm.
It seems pretty straightforward, but
Yeah.
is there a particular exchange that's best for beginners?
They actually recommend starting with Coinbase.
Okay.
Because it's user-friendly and has a good reputation for security.
Okay.
It's a fiat exchange, which means you can directly exchange your traditional currency,
Right,
like dollars or euros,
Yep.
for cryptocurrencies like Bitcoin, Ethereum, or Litecoin.
Okay.
And they walk you through the whole process of setting up your account, linking your bank account, and making your first purchase.
Okay, Coinbase for the first steps.
Yeah.
What about exploring those altcoins we talked about?
Right.
Is Coinbase good for that too?
Coinbase offers a decent selection.
Okay.
But if you want to delve deeper into the altcoin universe,
Right.
they recommend checking out Bittrex or Binance.
Okay.
These exchanges offer a wider variety of coins,
Gotcha.
often those you won't find on the more mainstream platforms.
Got it. So Coinbase to get your feet wet, then branch out to Bittrex or Binance for more specialized altcoins.
Exactly.
Okay, it all seems pretty simple, but the book also stresses the importance of securing your coins. Is it really that risky to leave them on the exchange?
Think of exchanges like banks.
Okay.
They're generally secure, but they're also targets for hackers. Remember, in the crypto world, you're your own bank.
Right.
The book emphasizes taking control of your security by setting up a personal wallet.
Okay, so a wallet is where you store your crypto separate from the exchange.
Right.
Makes sense. But there seem to be different types of wallets.
Yeah.
How do you choose the right one?
So they break down the options explaining hot wallets and cold wallets.
Okay.
Hot wallets are connected to the internet, convenient for everyday transactions.
Yeah.
But for long-term storage, they recommend cold wallets,
Okay.
which are offline and considered much more secure.
Okay.
They guide you through setting up both types and highlight the pros and cons of each.
So I've got my exchange accounts, my wallets, and I'm ready to start buying and selling.
Right.
But the book keeps hammering this point about developing a system.
Yeah.
Why is that so important?
Because without a system, you're essentially just gambling.
Okay.
They argue that most people fail in crypto because they're chasing quick riches,
Right.
jumping in and out of trades based on emotion or hype.
It's like that classic saying, buy high, sell low.
Exactly. A system helps you avoid those emotional pitfalls. They lay out a 4-stage strategy development cycle to help you create a framework for success.
Okay, walk me through this cycle. What are the stages?
It starts with goals.
Okay.
Not just vague aspirations like making money,
Right.
but specific, measurable goals.
Okay.
How much do you want to make by when? What coins will you focus on? Writing down these goals clarifies your intentions and helps you stay focused.
So having a clear destination in mind before you set off on the journey.
Yes. Then you move to rules.
Okay.
These are the trading guidelines that will govern your decisions.
Gotcha.
For example, how much of your capital will you risk on each trade? What signals will you look for before buying or selling?
Right.
Having predetermined rules keeps you disciplined and prevents impulsive decisions.
It sounds like this is all about taking the emotion out of trading.
Exactly. Next comes results.
Okay.
Once you've been trading for a while, you analyze your trades, both the wins and losses. What worked, what didn't. This stage is about honestly assessing your performance and identifying areas for improvement.
So it's a constant learning process, not a set it and forget it approach.
And that leads to the final stage, corrections.
Okay.
Based on your analysis, you tweak your system. Maybe you adjust your risk parameters, refine your entry and exit strategies, or even change your target coins.
This cycle is fascinating. It emphasizes that trading isn't a static process. It's about constant adaptation and improvement.
Yeah.
But before we move on, you mentioned earlier that they spent a lot of time in this book discussing risk management.
Right.
Why is that so important in crypto specifically?
Because, as we've discussed, crypto is incredibly volatile. Prices can swing wildly in both directions. They argue that managing risk is even more important than picking winning coins.
Right.
You could make all the right calls, but one bad risk management decision could wipe out all your gains.
So what are some key strategies for managing risk in the crypto market?
Diversification is a cornerstone.
Right.
Don't put all your eggs in one basket, as they say.
Right.
Spread your investments across multiple coins and asset classes
Right.
to reduce your exposure to any single point of failure.
That makes sense. Don't bet the farm on one horse. What else?
They emphasize setting stop-loss orders,
Okay.
which are like safety nets for your trades.
Okay.
A stop-loss order automatically sells your coins if the price drops below a certain level,
Okay.
limiting your potential losses. It helps you sleep better at night, knowing you won't wake up to a portfolio that's been decimated by a sudden price crash.
Those stop-loss orders sound like a good tool. Is there anything else people should keep in mind when thinking about risk?
They remind us again and again, never invest more than you can afford to lose. This sounds obvious, but it's easy to get caught up in the excitement and risk more than you're comfortable with. They provide a simple test. Can you walk away from a trade if it doesn't work out without regret? If the answer is no, you're risking too much.
It all boils down to being honest with yourself about your risk tolerance and financial situation.
Exactly.
Hmm.
They also talk about the psychological aspects of trading, like
Yeah.
the fear of missing out or FOMO.
Yeah.
When you see a coin pumping and everyone's talking about it,
Huh?
it's tempting to jump on the bandwagon even if it's outside your strategy.
Oh, yeah. FOMO is a powerful force.
Yeah.
How do you avoid getting caught up in that hype?
They stress the importance of sticking to your system, even when it feels like everyone else is making money but you.
Yeah.
It's about having the discipline to say no to impulsive trades
Right.
and trusting in your long-term strategy.
It sounds like discipline and emotional control are key traits for successful traders.
Mm.
But isn't there more to it than just avoiding bad decisions? Don't you also need to make good decisions about when to buy and sell?
Absolutely. And that's where those two analytical approaches we talked about earlier come into play. Fundamental analysis and technical analysis.
Okay, remind us, what are those again?
Remember, fundamental analysis is like looking under the hood,
Uh-huh.
evaluating the intrinsic value of a coin.
Okay.
You're studying its white paper, the team behind it, the problem. It solves its potential for adoption.
Right.
It's about identifying coins that are undervalued relative to their long-term potential.
So it's about spotting the hidden gems,
Yeah.
the coins that are poised for growth, even if the market hasn't caught on yet.
Exactly. Technical analysis, on the other hand, is more about reading the charts,
Yeah.
identifying patterns and trends that can signal buying or selling opportunities.
Okay.
It's less about the underlying technology and more about price action.
So using past price movements to try and predict future movements.
Right. They delve into specific technical indicators and chart patterns,
Okay.
but the key takeaway is that combining both fundamental and technical analysis can give you a significant advantage in the market.
So it's like having two sets of eyes, two different perspectives on the market.
Exactly. And they argue that using both approaches can help you not only pick the right coins, but also time your entries and exits for maximum profit.
I can see how that would be a powerful combination.
Yeah.
But even with all the tools and strategies, it seems like there's still an element of uncertainty in crypto.
Yeah.
How do you deal with that constant feeling that the market could shift at any moment?
They acknowledge that uncertainty is inherent in crypto,
Yeah.
and they don't try to sugarcoat it. They emphasize the importance of having a long-term mindset,
Okay.
focusing on the overall growth potential of the market,
Right.
rather than getting caught up in day-to-day fluctuations.
So it's about riding the waves, knowing there will be ups and downs, but trusting in the overall direction.
Exactly. They also stress the importance of staying informed,
Right.
continually learning and adapting as the market evolves.
No.
They recommend resources like CoinMarketCap, a website that provides tons of information on different coins, and news sites like CoinDesk and Cointelegraph to keep up with the latest developments.
So this isn't a passive investment strategy. It requires active engagement and ongoing education.
Right. But they argue that this active involvement is what makes crypto so exciting.
Yeah.
It's a dynamic space where you can constantly learn and grow as an investor.
I can definitely see the appeal in that. It's not just about watching numbers on a screen.
Yeah.
It's about understanding the underlying technology and participating in a global financial revolution.
Exactly. And in the next part of our deep dive, we'll take that even further,
Okay.
zooming out to explore the potential impact of crypto on the world. But for now, let's pause here and let all this information sink in.
Okay, so we've covered a lot of ground, from setting up accounts and making trades
Yeah.
to, developing a solid system and managing risk.
Right.
But now I'm curious to shift gears and kind of explore the bigger picture.
Yeah.
What does all this mean for the future? What's the potential impact of cryptocurrency on the world?
That's where things get really fascinating. This isn't just about individual investors, trying to make a buck.
Right.
Cryptocurrency has the potential to fundamentally reshape the global financial system as we know it.
I can see how some people might find that exciting, while others might find it a bit unnerving.
It's definitely disruptive, that's for sure.
Yeah.
The book touches on how cryptocurrencies like Bitcoin were created as a response to the failures of traditional institutions.
Right.
It's about decentralization, transparency,
Uh-huh.
and giving power back to the people.
Yeah.
Those are powerful ideas that challenge the status quo.
It almost sounds like a philosophical movement as much as a technological one.
There's definitely an ideological component to it.
Yeah.
Many early adopters of crypto were drawn to its libertarian ideals.
Right.
The idea of a financial system that operates outside the control of governments and central banks.
Yeah.
But beyond the ideology, we're already seeing the real-world applications of this technology.
The book mentions a few examples,
Right.
but it seems like those are just scratching the surface.
Right. We're still in the early stages, but the possibilities seem endless.
Yeah.
Crypto is being used for cross-border remittances,
Okay.
making it easier and cheaper to send money around the world.
Right.
It's being used to create more transparent and secure supply chains,
Yeah.
tracking products from origin to consumer.
Wow.
We're even seeing experiments with using crypto for voting systems, potentially revolutionizing how we participate in democracy.
That's incredible. It's mind-boggling to think about all the ways this technology could be applied.
Yeah, it really is.
But let's not get carried away. What about the challenges and risks associated with this new landscape? The book briefly mentions volatility and regulation, but are there other concerns as well?
Absolutely. Volatility is a major concern, as we've discussed.
Okay.
The crypto market is still relatively young and illiquid,
Yeah.
which can lead to wild price swings.
Yeah.
This can be exciting for traders looking for quick profits,
Sure.
but it also makes it a risky investment for those who aren't prepared for the roller coaster ride.
So buckle up and hold on tight.
Pretty much. Then there's the regulatory landscape, which is still very much in flux.
Yeah.
Governments around the world are trying to figure out how to regulate this emerging asset class,
Right.
and the rules are constantly changing. This uncertainty can create challenges for businesses operating in the crypto space and can make investors hesitant to jump in.
It sounds like navigating the legal and regulatory aspects of crypto could be a minefield in itself.
It definitely adds a layer of complexity. And then there are concerns about security.
Okay.
We've seen high-profile hacks and thefts in the crypto space,
Right.
which can erode trust and deter potential investors.
That makes sense. If people don't feel like their assets are secure, they're going to be hesitant to adopt this technology.
Right. And we can't forget about the environmental impact of crypto mining,
Yeah.
which is energy intensive and has raised concerns about its sustainability.
Right.
Some people argue that the benefits of crypto outweigh the environmental costs,
Yeah.
while others believe that we need to find more sustainable ways to power the blockchain.
So it sounds like there's no easy answer, no silver bullet solution.
Okay.
It's a complex issue with valid arguments on both sides.
Exactly. These are all real challenges that need to be addressed as the crypto ecosystem matures.
Yeah.
But despite these challenges, the potential benefits of this technology are hard to ignore. It has the power to create a more inclusive and equitable financial system, empower individuals, and drive innovation on a global scale.
It's almost like we're standing at the edge of a new frontier full of both promise and peril.
That's a great analogy. And just like any frontier, it's going to require courage, resilience,
Yeah.
and a willingness to embrace the unknown.
So no crystal ball predictions, but it sounds like you're optimistic about the long-term potential of crypto.
I believe that crypto in some form or another will play a significant role in shaping the future of finance and beyond.
Yeah.
But it's important to remember that this is still a relatively young technology. There will be bumps along the road, setbacks, and unexpected twists and turns.
So buckle up and enjoy the ride.
Exactly. Stay curious, stay informed, and be prepared to adapt as the landscape evolves.
Yeah.
The book emphasizes that the most important thing is to have a solid understanding of the fundamentals.
Right.
To develop your own system for success and to manage your risk wisely.
I have to say this has been an incredibly insightful deep dive.
Good. I'm glad.
I feel like I have a much clearer understanding of the world of cryptocurrency, from the practical details of trading to the broader implications for the future. What a ride.
I'm glad to hear that. Remember, this is just the beginning of your crypto journey.
Yeah.
There's always more to learn, more to...
I'm ready to dive in. Thanks for guiding us through this complex and fascinating world.
It's been my pleasure. Here's to your crypto success.